Hello, my name is Steve Bigelow with the Candlestick Forum. We're going to do a couple of special recommendations based upon the Doji candlestick pattern or the Doji candlestick signal. When you're in a market condition like we are right now, where there's really no decisive direction, we don't know whether it's heading up or heading down. Stochastics aren't giving us any clue. So right now we can assume that we're in a downtrend as long as the Dow continues to trade below the T-line. But on the other hand, we can kind of anticipate that the NASDAQ might be in an uptrend as long as it's staying above the T-line. However, you can see the magnitude or the strength of any buying is not very resilient. Stochastics are sideways. So the market is probably still in a condition where it doesn't know whether it wants to go up or go down. However, knowing what individual candlestick signals provide for us, the Doji candlestick pattern, the Doji itself is probably the most recognized candlestick signal. And it's easily identified by on any time frame, whether you're trading off a daily chart or a 5-minute chart. It represents that there's indecision between the bulls and the bears. They open and close at the same level. This is called a Doji Star, a small trading range, opening and closing at the same area. A long-legged Doji is obviously where the magnitude of the move during the day is much bigger. The Japanese rice traders name this one where they open at the top, trade down, close back at the top as a dragonfly Doji because it looks like a dragonfly. And the gravestone Doji is explained by the Japanese rice traders as the warriors coming out of camp, going into battle, and by the end of the day, they're beaten back into camp, leaving their dead all over the field, thus the gravestone. This allows us to identify with high degree of probability different candlestick patterns. The double Doji, you can see the downtrend or the big reversal on Twilio after it failed at the 50. Did a bearish belt hold signal, closed below the T-line, could never get back up above the T-line. And this is more of a consolidation. But after a hard sell, indecisive trading, and then this day tells you this is the decision they're making, that downtrend still in progress. The double Doji is a very high probability trade setup. It implies that there's more downside, and in this case, you can see the little support level broken. Look for more downside on weakness if the market opens weaker tomorrow. On the other hand, if the market picks up strength, here's our classic pattern, an NMRK, a fry pan bottom, followed by a J-hook pattern is your classic pattern. It implies there's going to be more upside. But what greatly enhances the ability to see that there will be more upside is look at your Doji sitting right here on the T-line and the 50, and then trading positive. Remember the Doji rule. Very simple. The prospects or the probabilities are pretty strong that the price is usually going to move in the direction of how they open after a Doji. So even cutting off the chart right here, we knew that if it opened positive, it was completing our classic pattern. This allows for quick entry in the appropriate places. And even if you're a day trader, it allows you to identify which trades are going to go in the right direction. You might not know the magnitude of the move, but at least you know you're trading in the right direction. So the Doji has a bunch of signals that are extremely high probability trade setups. These are just a few. You might want to try our Dynamic Doji product. It's about, it's a good long video showing you the different setups and using the very simple rules that a Doji can be applied to confirming these signals and patterns. The price will usually move in the direction of how they open after a Doji, making these extremely high probability trade setups. Well, that'll be it. Check out those two positions based upon how the markets open tomorrow. We'll see you in the chat rooms.